back, take a look at futures on this first trading day of November. Markets are lower this morning. Futures indicating a decline at the start of trading. Dow Industrials down 140. The Nasdaq down 70. S&P right now down about 20 points. Of course, yesterday we had a pretty good rally, but that did not help the month of October. Joining me right now is the Fitz-Gerald Group principal, Keith Fitz-Gerald. Keith, good to see you. Thanks so much for being here. Adam Johnson just said, I think the market did the work for the Fed. You agree?
Oh, absolutely. You know, the Fed lost the plot a long time ago, and the market took matters into its own hands, which, believe it or not, is actually a good thing.
Keith, what does 5% mean to you? Does that mean you want to put some money out of stocks, put it into fixed income? Does that become an allure for you as an investor, 5%?
Well, it's an interesting question. I mean, we put some money into treasuries here a couple weeks ago. We began to work that way. Now, I think we're looking at the opposite. We're looking to deploy it because, you know, one of the things that you've got to think about, 5% sounds great. It sounds safe. But what if we're chasing stocks that are going to go at 15, 20, 30%? If we're stuck at 5%, we're going to give up all of that opportunity. I'm not willing to do that right now.
Yeah. Meanwhile, we're watching earnings. We're in the middle of earnings season. We are looking ahead to Apple. Apple will report its earnings after the bell tomorrow. This gives us a window into so much. Gives us a window into China. Gives us a window into the consumer. Nvidia is down this morning, as is Apple. But look at Nvidia. Their new U.S. export controls may force the technology firm to cancel $5 billion in next year's orders of AI chips to China. Stock down almost 1% right now. But of course, it's had an incredible run. Keith, your thoughts on what to expect from Apple and the tech space in general?
I think, you know, it's interesting. Apple, I think, is going to have pretty darn good numbers. I'm expecting 5 to 7% growth. I think what I'm really going to be watching is any move into AI, any move into custom silicone, any move into additional sensory inputs into the iPhone platform. It's not about the phone anymore. It's all about the data and the services. So I expect strong numbers there. Generally speaking, you know, a company like Nvidia, for example, I'm not particularly concerned by this because we're talking about a market that's growing at 40% a year.
Wow.
We're talking about 50% of the executives looking at AI. We're talking about all kinds of things. So I think you're going to make up that ground very quickly.
Wow. Here's Cheryl.
Keith, it's Cheryl Casoni. And, you know, I wanted to get your take on earnings overall so far, because what we're seeing is there's some big winners and there's some big losers. Caterpillar, a big winner. But then some of the tech space, some of these big names, Alphabet last week, somewhat of a loser. I mean, how are you picking and choosing? Are you going by sectors or are you more focused on individual names right now?
That's an interesting question, Cheryl, and I think right on point. You got to go with the quality names regardless of sector. So to me, we break it down into the must-have companies and the nice-to-have companies. In the tech space, for example, I'd rather own Microsoft and do than Google, which I don't, because I think it's the far stronger player. It brings people together. Google is just a search engine. It's just big data. They're playing catch-up rather than leading the pace.
Thoughts on the Fed today and the jobs numbers out later in the week. Keith, how do you see the macro story?
I see the macro story getting a little tougher. I think we've certainly got the widening war in the Middle East. That's a concern. The Fed in particular has to pull off a Goldilocks moment. I'm not convinced Powell can do it. He's certainly not stupid, but I think he's going to try to portray these in charge. The problem with this, Maria, this is something nobody wants to talk about for reasons that just mystify me. If the Fed is going to be data dependent, it means it's looking in the rear view mirror. That also implies that it hasn't got a forward-looking strategic bone in its body.
Yeah.
I think the American people, and in fact, global markets need that.
Yeah, so you want to sell into any strength going into year end then?
No, I'm in fact going to take the opposite approach. I'm going to be looking for those quality names that are beaten down right now. Nvidia is at the very top of my list as a result of what's happened overnight with this Chinese order. I'm going to look at other companies. I'm going to try to work my way into strength. I'm going to slow down my buying. I'm going to take a measured pace, but I'm still going to be on the offense.
All right, Keith, we're going to be watching. Thanks so much for being here this morning.
Thank you, Maria.
Keith Fitz-Gerald joining us. Quick break and then...
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.